Please welcome to the stage DarkMatter Group CEO Karim Sabbagh, Checkout.com CEO Guillaume Pousaz, ADGM CEO for Financial Services Regulatory Authority Richard Teng, Bahrain Economic Development Board Senior Manager of Financial Services Dalal Buhejji, and Bloomberg Dubai Editor Nour Al-Ali.
Hello, everyone. I know we're steering a bit closely towards lunch and everyone's getting a bit antsy, but thank you so much for sticking around. So we've seen earlier today thought leaders in the industry talk about how technology is revolutionizing everything we touch. And we're not going to get into that because that's precisely what we've been talking about all day. But I'd like to talk to my panelists today about the different fractions of the industry and the universe that we've got. So we've got some regulators, we've got some startups, and we've got some cybersecurity angles that we're going to talk about. And I'd like to kick this panel off by talking about the elephants in the room, because we're in the Middle East. We've got plenty, unfortunately for us. So if I can take you to the polling question, which is going to come up in a second. And we're going to kick it off with the first question of this panel. Is regulation stifling innovation in MENA? So if you can take a minute to vote on your phones. Interesting. We've got a very friendly audience here today. All right, 79% yes. That's a tough one for the regulators in the corner. Dalal, I'm going to start with you because we know Bahrain has been trying to be ahead of the curve, one step ahead at every corner. Recently, you've announced cryptocurrency-friendly regulatory framework from your central bank. It's quite an agile move. Talk to me a little bit about that, and how can we convince our audience here today that you're their friend?
So if you look at Bahrain, financial services has always been a key role in driving our economy. The financial services has been around for over 40 years, and we have a very solid regulator when it comes to regulating the financial services. Recently, obviously, we've seen a shift towards FinTech and innovation, and how FinTech startups are playing a very big role when it comes to the whole ecosystem. Now, the regulator understands that there needs to be the right framework and the right regulations in place, which is why we've introduced a regulatory sandbox that has supported entrepreneurs and startups to test their innovation, to test their solution, but at the same time allow the regulator to understand what are the right framework and the regulation that is needed to allow such companies to operate out of Bahrain. Now, you need to understand Bahrain is a very small economy, so it helps because you can get things done quite fast. We have a single regulator where innovation or changes in the regulation can happen quite fast. Now, in the sandbox, we have 29 companies, 2 of which have graduated. One of them actually is the crypto asset trade platform, and the other one is open banking. Due to their graduation, that's why the frameworks were out and put in place. So we're working together with the industry. We're listening to the industry, what they need to do. We're listening to what the entrepreneurs need, and trying to put the right framework to support the growth of technology and financial services.
Richard, I'm going to take it to you because you have a similar program in Abu Dhabi as well, if I'm not mistaken. Talk to me a little bit about how difficult it is. Let's say I'm a startup founder. I'm one of those nice entrepreneurs that just want to get in. How difficult is it for me to get into those programs?
I would just let me digress. If you ask that question in any region, I would say the answer is the same. Whether it's in North America, South America, Asia Pacific, whether regulation is stifling innovation, I suspect the answer that you're going to get out is the same. So it's a loaded question in many sense. But taking a step back, I would say that regulation is part of it. Building the ecosystem is another part. I'll go into some of the details later. But if you think about it, Abu Dhabi Global Market is a very new international financial center. We are 3.5 years old. There are many centers that's established in this region way before us. And this is a center of wealth, if you look at Middle East, Africa region. But it has never really developed into a center of premier wealth management. It's a center where people come and raise funds, but it has never really developed into a center of listings. It's a center where you have great real estate offerings, but it has not really developed the real estate product classes such as real estate investment trusts. It has some of the top commercial aviation airlines in the world, but aviation financing is not conducted from here. So that's what we aim to solve, and we try to change the narrative when we come in. We want to make sure that activities are being anchored here for the benefit of this region. We put in place regulations. So from the very start of our journey, we embrace FinTech. We are the first to introduce a regulatory sandbox in this region. For that purpose, our sandbox now is the second most active globally after the London FCA sandbox. We are the first to introduce a crypto asset exchange framework. And that's a very comprehensive one, if you look at it. And if we have copyrighted it, I think we'll be quite rich by now when people look what we have done. But I think it's important to put the right framework, the right regulation in place to support growth. Right? Regulators, you probably fall into one of three categories. Right? So you have one sort of regulators that look at opportunity, risk, choose to focus on risk and say, it's too much risk to take. I'm not going to do any regulations on that front just in case I get blamed later if anything goes wrong. You have another sort of regulators that look at it and say, yeah, let's grab the opportunities, but the framework are not smart or not adequate enough. And you actually introduce new risks into the system, and the sector doesn't grow in a sustained fashion. And you have the third category, which I believe we are. Look at the opportunity and risk and see how do we address the risk properly to support the opportunities to grow in a sustainable fashion, which is why our crypto asset framework not only addresses the AML KYC risk, it addresses custody risk. Last year, more than 1 billion worth of coins and tokens were stolen. You need to address that risk properly. You need to address risks of technology governance, cybersecurity. You need to address risks of exchange operations and investor protection. Only by addressing all those risks that you can bring in the institutional investors, and only then that you see greater stability in the pricing of this asset class. So that's what we aim to do. Looking at different parts of the ecosystem, bring the players in, making sure we have conducive regulations to support that growth.
Okay, so we've gone into cryptocurrency, but that was going to be the last part of my conversation. So I'm going to just take it a little bit back, and I'm going to go to checkout.com and talk a little bit about how easy or difficult is it to conduct business in the region comparatively, because you're in several markets. So talk us through that. Now you've heard the regulators speak.
I was going to say I'm pretty optimistic when I hear all the motivation and the strong will there is to actually create the proper frameworks. We have been regulated since 2012 with the FCA. Now, due to Brexit, we have to be regulated in Europe, so we're going to France as well. We're doing the US, we're doing Hong Kong, we're doing Singapore. There is no doubt that you can correlate innovation and regulation. I think regulation fosters an environment in which innovation is going to blossom. And usually it follows venture capital, private equity, it creates jobs. I think there is a strong commitment to the region to make the region more global, create jobs, create value in the regions. So ultimately all this regulatory framework being implemented is very good for us. Especially for a company like ours, where today we have to give only 50% of our services here because we cannot do the financial services part. We are a pure technology company in the UAE. We carry transactions on a day-to-day basis, but we cannot touch funds because there is no right regulatory framework for what we do, other than if you're a bank, and hence we have to partner with banks. The regulation will create more opportunities. We were definitely going to, look at the sandboxes and, I guess, try to leverage them to the extent that they fit our business model. I think we discussed crypto, we discussed, payment services. It's about also creating the right buckets within the regulations for the different types of activities. Innovation, and especially entrepreneurs, can go very quickly to very often ahead of the regulators. So it's about creating the right models for businesses that are existing and try to, create value within the country.
Okay, so I'm going to go to you, Karim. I would like to go back to the slide about the different kinds of deals that were made, FinTech being the leader in 2018, if we can. because there was an interesting part in this chart if we see that the amount of deals that were done in FinTech supersede others. But I see IT solutions there, I see delivery and transport, and I think cybersecurity touches upon every one of them, especially when it comes to data. And you know, data now is this whole issue for bigger social networking companies like Facebook, Twitter, and Google. So let's take it back a little bit locally. Where are we at in terms of that? Is the regulation catching up with all these different startups, or are we still at a loss somewhere?
I would say generally that we're catching up on multiple dimensions, including regulations. But we have to recognize that cybersecurity is a nascent field. This is where we are. We spent the past 15 years or so as captains of industries, single-mindedly focused on digital transformation. And cybersecurity was almost an afterthought, or actually became a prime thought after an accident happened, so a successful attack. And so if you step back and you think about why this is the case, I would say threefold. First is because we as societies and economies globally in the region, we haven't yet fully fathom the full impact of the digital landscape we have created. And let me exemplify this to you. If you have 10 devices communicating between each other, this is equivalent to 10 to the power 10 permutations of how they communicate. And each one of these permutations could be a contributor to a threat attack. So imagine a global society or a regional society with millions, if not billions, of devices being connected, and sort of you start putting on top of this the importance of cybersecurity. Secondly, I would say we don't have yet in the public discourse a coherent way to talk about how we measure cybersecurity. And I'll give you a simple example. If you survey the digital footprint of the UAE, so anything that is visible to the public, so a website or a server, that would amount to around 800,000. Through our proprietary tool, we're able to determine that 266,000 of this 800,000 have meaningful vulnerability, 40% of which are serious vulnerabilities, i.e. I can literally alter, an attacker, an adversary can literally alter these websites. So we need to come up with a common way to think and to measure the impact of cybersecurity. And the third lever, I would say, is we're in the early innings within policy making in general, within the C-suites and the boards to think about sort of the evolution of the cybersecurity strategies and regulations, and also how to put in place the organizations, whether they're the regulators, but also the security agencies that will take in charge of this particular agenda. So you look at this glass and you would say it's half empty. I would say it's half full, because it's a formidable also opportunity for us as a fully integrated cybersecurity providers to have a great impact. So yesterday, Danielle presented the phenomenal work that's being done at Expo 2020. DarkMatter is the cybersecurity provider of that project. And you have to sort of step back and think about the fact that this warfare is the most digitized warfare ever. Now, you could make the case, well, obviously it is, because digital technologies have evolved. But to be able to sort of secure from a cyber standpoint for 6 months all these digital assets, all the visitors, is a phenomenal task. There is no precedent for it. We're doing the same work currently with the Emirates Nuclear ENIC, so the Nuclear Energy Corporation. And there we're working hand in hand with the management to make sure that the cybersecurity readiness of their first plant, Baraka 1, is going to be there so that it becomes operational. And again, there is no precedent for this. That particular nuclear power generation plant has no equivalent in terms of level of digitization. So I think our industry in general, the digital industry and sort of the counterpart, which is the cybersecurity industry, have to work together, because very simply, the more we expand the digital landscape, the more we have to do on the cybersecurity safeness of everything that we're doing.
Okay, so you bring up digitization. I've got an easy question for you guys, because I imagined you'd be tired. So if we can bring up our second polling question about digitization in your respective industries, and it'll be live in a few seconds. How quickly is digitization being adopted by your business? This is an easy one, I know, but it's leading into my next point in discussion. Interesting. Quite frankly, I imagined the not at all would be less than 5%, but I am an optimist. Interesting numbers. Quite interesting. Okay, so here's the thing. I'm going to take it back to the governmental entities, regulators side. I'm kind of shocked with the not at all 13%, because I would have imagined it being a lot less. But do you think the region would benefit from a coherent cybersecurity regulatory framework for those kinds of startups that you work with in your sandboxes? I mean, what kind of requirements would you need to have to kind of bring in those companies, but also making sure that data is being secure and, you know, breaches are preventable in a way?
Go ahead.
So I do think that for a lot of startups, resource is a key concern, right? So when they start to build out, I think there are a few key areas that they tend to look at the type of products and services that they try to introduce into the marketplace very quickly, but they tend to ignore some of the key risks that you spoke about, which include cybersecurity, AML, KYC risks. And if they do that, then scalability will be an issue for them subsequently. As they continue to grow, they find that, look, it's quite difficult then to introduce new elements to address those issues, which is why in our sandbox, for those players that we admit into our sandbox, and we only admit players that we think are truly transformational, that make a difference in the region, that we can support them in terms of guiding them through our rules and regulations, pointing out to them areas that they should look at in order to make that business scalable. These are some of the key issues that they really need to focus on. I'm quite surprised with the results as well when I look at it. Because if you look at it, scalable tools, AI, digitization, blockchain, cloud computing, and the likes of it, all the scalable tools are really forming the backbone of financial infrastructure going forward. You can't run away from it. Because the amount of data that's generated, the amount of complexity of financial transactions that we're seeing is only going to accelerate. You need all these tools to really accumulate, store, analyze the data set that's coming through. So I'm quite surprised to look at the results in that fashion.
I mean, if I may just jump in. So when you look at the whole transformation of an economy, moving to the digital economy, you need to think of the whole ecosystem in place. So having cybersecurity in place is very crucial. Artificial intelligence is also very crucial to support your data to be able to track the right kind of information. So that's something that we're very heavily looking into as well through our regulatory sandbox, but also the engagement of the industry. Not only through FinTech startups, but the current existing players that are currently transforming and moving towards being more digital. That is something that needs to be focused on and looked at heavily. Maybe it is still also in the early stages in this region because, again, the transformation towards the whole digital economy is very new, which is why it's an opportunity for such companies to be in this region right now because, that's where such resources is needed to guide the government, to guide the companies, to guide the banking industry on how to protect your data and how to have the right cybersecurity in-house to move forward to become more digital.
I see you are looking at me.
Yeah, I wanted to jump in. I think it's also about educating the market about what's actually possible. Typically, in credit card processing, you do not need to store a credit card anymore. So I think there is certain providers that can do a segment of your business while still you being able to do the rest of your business. And is it education of the market? Is it regulation? And I mean, as a European company or headquartered company, we had to go through GDPR, which actually has significant financial consequences and which actually forces you to look at how you operate your business because when we're talking about 4% of your net revenue, this very quickly amounts to a huge bill. I think, going back to the credit card processing world, if merchants were fully aware of what they're capable and responsible for the fine associated with a breach, because today, I mean, we read a lot about credit card breaches on the internet or in the newspaper, but most of the time there's no financial consequence. It's maybe bad press for you as a company, but the regulators are not actually imposing financial consequences associated to this. So I think we need to strike the right balance between, because being a startup, we were there with like a small team and not having 20 lawyers on payroll sitting in London. So you strike the balance between not hindering the ability for startups to grow, and at the same time having the right level of regulation that makes people understand that if they do make a fault, there will be consequences. And I think then entrepreneurs, companies are more likely to then say, hey, there's an off-the-shelf product that allows me to do this. Okay, I don't have the full data, but I still get the benefit of the data. Typically with a token today in the credit card processing world, you can actually recharge the card whenever you want. You don't even need to ask your card holder to get an updated card. All of this, Visa and MasterCard provide these services, so why would you want to have the full PAN stored on your servers? There is formally, no benefits to do that, other than maybe pride or ego or the fact that you say, I own my data. But it's like, that data is not relevant to you. It's just actually creating a certain risk. If you're willing to take the risk and face the consequences, then fundamentally do it. But right now, there's no consequences, so people would be tend to saying, I will just do it and not, look at a holistic set of risks.
You're right, and Karim, I feel like you want to say something, but before that, I do want to highlight that it's not just startups that face this. If I can call up the list of headlines that we have seen where bigger companies have actually faced cybersecurity issues as well, where we can see it actually impacting their financials. And we've got a little chart that here it can take a look at all the different, we're getting there, don't worry, we're almost there. It's not this one for sure, it's another one, and it's right there. So you can see, though, that there are many industries that are facing this issue. So how do we take it the next step? What's, you're sitting right there. You're between the regulators. You're between the startups. What is the missing link?
Let's go back to half full, half empty. So if you look at institutions in general, and we get to do many of these cybersecurity assessments, and I would simplify this along two buckets. How much from a management control standpoint they are ready, they are prepared to deal with the cybersecurity risks. I would say it ranges between 60 and 65%. So they're 2/3 of the way. Now, when you sort of ask the same question when it comes to the technology tools, that number is 30%. Said differently, there's a 70% risk that if there is an attack, this attack is going to be successful.
Wow.
So we'll start from there. So in a sense, the solution is not going to be a silver bullet. It's going to be a combination of table stake regulations that cut across all sectors. So GDPR is a table stake regulation that effectively creates the incentive or the obligation, depending on how you look at it, to preserve personal data for any institution, academic, private, public, so on and so forth. Then there are going to be a set of regulations that are specific to industry. So financial services is one of them. The one in which we are also quite engaged is in the nuclear energy. Unless you meet very strict requirements, you cannot bring into operation a nuclear plant for the purpose of power generation. So regulation is going to take us a certain way. The other part, and having been in the role of a CEO of a publicly traded company, it's also on the management and the C-suite to ask themselves the question, are we doing the right thing internally to make sure that we are mitigating these risks? There will never be a time where we're eliminating these risks. Cybersecurity readiness is constantly going to evolve. And that's the biggest challenge. But I think shareholders should demand from those companies where they have a voice that they are transparent about what they're doing to secure the organization, to secure the data. They should demand these companies to be proactive in terms of disclosing breaches when these breaches happen, whether they're obligated by regulations or not. So in the case, for example, of tech-centric industries, if you acquire a technology that is ITAR protected and you have a breach, you have an obligation within a certain number of hours to disclose. And then you have to go through a rehabilitation due process for 2 to 3 years to demonstrate that you've put checks and balances in place. So I'll go back and try to summarize by saying there are going to be table stake regulations, vertical regulations per industry. There's an onus on the management of those companies, so the captains of the industry, to do what is right, also to be proactive about disclosing, and also to work with their partners. So in the case of DarkMatter, part of the work that we do is we conduct a lot of research to identify vulnerabilities, 0 days, so vulnerabilities that have never, ever been discovered. And before we communicate this to the public, we notify the technology provider. So recently, 2 weeks ago, I think, we disclosed that a certain model of IP, Cisco IP phones in the world had a major vulnerability. We worked with Cisco through a responsible disclosure process. Within 90 days or so, they fixed it. And it's only after they fixed it that they notified all their customers and publicly. They gave credit to DarkMatter, and we communicated this. And we have many of these. So companies also being transparent of the work, about the work that they're doing in the cybersecurity space is also part of the solution.
Right, but you're talking to me about transparency, and one thing that we know, unfortunately, is pretty prevalent in the region is that there's a lack of it, whether it's disclosure from private companies. We've seen the headlines about DarkMatter, and I'll give you a chance to discuss that. We've seen, headlines about protests in Bahrain, the aid packages that are going there. We've seen, all these different elephants that come up. And so how can we expect investors abroad, how can we expect companies like Checkout.com to come in when, they could go anywhere else where it's a lot more transparent, it's a lot easier to do business. And I will give each of you a chance to discuss, because I threw you under the bus there, but I'll give you 30 seconds to respond to me.
So it's a nascent field, and the public has a right to understand what is being done. So what we do is all defensive capabilities. I get to see the headlines in the news. These claims don't have a reality within DarkMatter. We don't have any of these capabilities, nor do we have any intent to have them. And this is why I said in the beginning, part of, I think, the way we as captains of digital industries and regulators need to sort of contribute to this is to make the discourse around cybersecurity clearer, make the measurement about cybersecurity more tangible.
I'm going to cut you right there and say thank you. I will come to you last. I want to give Dalal a second to respond to me. You've got 30 seconds to tell me why should people come to this region, not just Bahrain, despite all the caveats that we've mentioned before.
So I think this region is late in coming into or entering the whole FinTech and technology revolution, which is great because we learn from previous economies and what other countries have done, their mistakes, and implement it in a very fast way. Bahrain, again, because it's such a small country, we were able to advance very fast. In the last couple of years, we had record years in terms of FDI. We continue seeing these numbers going up. We are very optimistic that this year as well, we're going to hit another record year in terms of FDI, especially when it comes to innovation.
Do you have the numbers for us?
So in terms of last year, EDB by itself, the Bahrain Economic Development Board, have attracted over $850 million US dollars in FDI, which is a record. That's only from EDB, not Bahrain as a country. So the appetite is very positive. It's very high. And we are doing our best to put the right ecosystem, the right landscape, the right regulations to support the growth of companies and the existing companies in Bahrain to thrive further.
Thank you for that. I will come to you as well. I'm going to give you 30 seconds to give me a response, and then we'll end it with Richard.
I think, again, one of the real opportunities that we have in this region today is to align all the regulators. I think if you look at countries individually, it makes the business case always a bit harder than if you would have a GCC region that act as a whole. I think there's a real opportunity when you say that you are a bit late, and I think this is debatable, maybe not, to actually align the regulators, and even if you have certain flavors for your country, still find a way to passport, the rights of a license in Bahrain, in the UAE, in Saudi, in the markets that have real, economical power. For a company like ours to invest, this is what we're looking for, and the opportunity is there.
Thank you so much. Richard, any final thoughts?
No, I think in terms of opportunity, it's robust. This region, including Africa, will account for more than 50% of the world's population growth by 2050. So there are plenty of opportunities to be tapped. Again, is how do you tap those opportunities? In terms of risk, I do think that the perceived risk is much higher than the actual risk. And part of that is due to judgmental reporting in many cases. 80–85% of UAE population are foreigners. Some have been living here for decades. This is a place of political stability, extremely safe, high quality of life. So if you live here, and work here, I think the perceived risk and the actual risk then will equalize.
Well, thank you so much to my panelists, and I would like to urge you all to give us a round of applause. That was a tough one in the end, but we stuck through.